All right, I think we are live or close. Yep, looks like we're live. Okay, awesome. Okay, so hopefully you guys can hear me okay. We got some new audio set up here. Um, okay, awesome. So today we're talking about write-offs. Every one of you guys in this group are clients of Money Muscle, and hopefully we've shared with you information on what you can deduct, what you can't deduct. Maybe some of you have received the tax write-off guide. It's kind of like the start to documenting every single thing you could potentially write off. You know, obviously everyone's situation is different. Some things you may have and some expenses you might not have, and some things might be deductible for you because of your business, and some it's not going to be. It's all really based on the situation. So it's kind of weird. But really, what I'm trying to do is have an easy way to share with you guys all of the things you can write off traditionally, right? So there's always going to be maybe something that you have a question on, or you're just not sure if it really is deductible for your situation, and that's totally okay. This is really meant to be the encyclopedia of tax write-offs. So you can look it up, you can watch this video, and you can find, okay, marketing, what can I write off for marketing, right? So this will be ever changing. There's always going to be new things that come through that we have to assess, right? But basically, I wanted to just kind of go through tons of deductions that you could write off, and specifically geared towards my types of clients, which most of you guys are in the health and fitness space. So I might reference terms that are familiar to you. I do have clients outside of this industry. That doesn't mean that your particular software or your particular education program is not deductible. Okay, so it's just certain names I'm going to be using. Okay, all right. So to start, let's talk about advertising. So when I think of advertising, I immediately think paid marketing, Facebook ads, Google ads, Instagram ads, like whatever ads you're running. If you're paying to get clients or to get attraction from prospects, whatever that is you're paying for, that is all deductible, okay? So any paid marketing, and also it could be like print marketing, like actual in-person, not digital. So it could be digital stuff. It could be like flyers, or if you guys do like, you mail them a card in the mail, like the little vouchers that come through, a page in a magazine, like all of that's marketing. And if you pay for the actual ad, or if you pay for the things to put the ad together, like the paper and the ink and the person printing it for you professionally, like that is all deductible, okay? So any type, like think about the way you're marketing online, in person, whatever, traditionally or modern. What expenses do you have, okay? Those are all going to be deductible, because if you didn't have your business, would you be promoting your services? No. Okay. So if you're trying to promote your services, those are all going to be deductible. Okay. So so next, auto, right? You guys already know about auto, because I probably have already talked to you about auto, your vehicle, using it for business. Well, if you guys haven't seen the video on how I talk about the 2 ways to really deduct auto expenses, I'm going to share briefly about it. But really, the first way is by mileage. So if you drive 5 miles to go train a client, and then you drive 5 miles back, that's 10 miles. Those are all deductible miles, okay? There are other rules, but basically you're getting a deduction based on the number of miles you drive. They have a reimbursement rate per mile that you get to take on your tax return as a deduction, okay? Now, the second way is my favorite way, because it's a kind of an incentive to get the car you've wanted. And, if you're using your vehicle for business, taking the actual expenses of your car, the business portion, that is really, it can be very beneficial. So let's say you are a mobile trainer or you're a real estate agent. Okay, you're probably driving a lot, right? So if you spend more than 50% of your time in your vehicle driving, you can deduct part of the purchase price of the vehicle. Now, if you are like, I'm a mobile trainer, or I'm, meeting clients at the park or in their house or whatever, and you have a specific vehicle for the business, maybe it's like a van, so you can put all your equipment in there, right? Then that can be 100% as well. So really, you're taking some or all of the purchase price of the vehicle. You're taking whatever business portion of gas, insurance, car washes, maintenance, tires, repairs, all that stuff. Really, anything to maintain the vehicle so you can use it for business, that's all deductible. Now, everyone's situation is different, so I'm not going to be able to tell you, oh yeah, it's 75% or it's 50%, depending on your situation. Okay, so you're going to really have to work with us to figure that out. We do that every single year with everyone. We ask them, do you drive for business? Do you still have this car? Did you change cars? Things like that. Okay, so we ask that specifically every single year during our tax intake calls. Okay, so if you aren't taking auto and you do drive for business, I would start taking it. There's no reason not to. Okay, if you're worried about getting audited, keep a mileage log, and you'll be okay. Okay. The next thing is bank fees, and like this is like, let's say you have Chase Bank and you have a certain amount you deduct, and a certain amount you deposit in your bank and you don't hit the threshold, they send you a bank fee, a monthly maintenance fee. Okay, or maybe you have an NSF, insufficient funds, right? And you get a $35 fee. Well, if that's a business account and you're getting those fees, those are deductible as a business expense, right? Because it's a business bank account, you can deduct it. Okay. Now, obviously, we don't want to deal with bank fees, so the less bank fees you have, the better, right? But one thing to kind of tag on to that are merchant fees. So a lot of you guys use PayPal, Stripe. Some of you may use Venmo, which doesn't really have merchant fees right now. I'm sure that'll change in the future. But really, PayPal fees and Stripe fees. Some of us use QuickBooks invoices, which allow you to receive ACH or credit card payments, and they have a merchant account as well. And so we have like QuickBooks payment fees. Okay, so we use that here. We use Stripe as well. So it just kind of depends. But any of those fees you pay to the credit card processor or payment processor, those are all deductible. Now, what you have to be careful with that is sometimes the amount, like if you're using PayPal, everyone pays you through PayPal. PayPal takes their fee, and then they send you the net amount after the fee. You can't go and say, okay, I received this amount from PayPal, and then I'm also going to deduct the fees because they've already been deducted. Okay, so it really depends on how your accounting is, your bookkeeping. If the merchant fees are already taken out of that income that you've transferred out of PayPal, or if we need to say, hey, you've received this much from clients minus these fees, and that's the net amount. At the end of the day, it's all the same, okay? But we just want to make sure we don't like double count the merchant fees, because that's just going to underreport income, which is, we don't want to do that, okay? Illegally, at least. Okay, so that's bank and merchant fees, okay? If you guys have a specific processor other than the ones I mentioned, and you're using it to collect client payments, just know that it is deductible, okay? You're not just out the money, okay? All right, so the next thing is business meals. I've been talking all day, so I'm kind of losing my voice here, but okay, business meals. Let's say I take a client to a restaurant down the road. We have lunch. We talk about their taxes. Just a scenario. Okay, if I pay, then I get to deduct the meal, right? The whole cost. Now, normally, under normal rules, it's 50% deductible. And they basically say you can split it half and half, and you get to deduct one half of it. And the one half is really the person I'm paying for. It's not for my food. You can't write off your personal food as a personal expense. Personal expenses are not deductible. Okay. Now, under the new laws that were enacted December 21st, 2020, Trump signed into law that for the next 2 years, 2021, 2022, this started January 1st, 2021, this year, okay, for 2 years, you can write off 100% of business meals. So now, if I take a client to lunch and we talk about their taxes or whatever business stuff, now I can write off the entire meal, including my food, which is crazy because now I can technically go to lunch with someone every day, talk business, with a purpose, and deduct the food every single time. And you guys can do that too. Let's say you're a trainer, and you take a new client to lunch, to a healthy lunch, because you want to show them healthy food is awesome, right? And so you take them to the healthy place, whatever, and you guys talk about, how are things going in the training and my program, whatever, or whatever reason, business purpose. Okay, maybe you're having like a half period check-in, right? Like you're checking in, seeing how things are going, or maybe it's like, hey, you did so well in my program, like I'm taking you to a healthy dinner or whatever, right? So that is 100% deductible. So super, super cool. If you're not taking advantage of business meals right now and you are actually going out to lunch or dinner or breakfast or coffee with someone to talk business, I would start writing it off, deducting it, have your business pay for it. And if you're not, and you do go out to eat in some aspect, like let's start kind of tweaking how we're doing that and actually start inviting, hey client, or hey team member, like let's go there and we can talk about it there, So let's start actually getting a benefit and, taking people to lunch and stuff like that. It's more than a tax deduction, if you know what I mean. Like you're also having the one-on-one time, creating the bond and the relationship and all of that. So it's all good for morale and everything like that as well. So double benefit. Okay. All right. So the next thing is computers and software. Okay. And computers and software are pretty straightforward. If you buy a mouse, right, a keyboard for your computer that you use for business, that's all deductible. Okay, so any computer stuff, it could be a webcam, I have lights up here, the microphone, right? I'm using this all for business. Like I would never buy this thing for personal, like what am I gonna do, like sing to myself? No. It's all business stuff. Same with software. There's a lot of software I buy because we're fully remote, and I'm sure you guys do too as well. You guys probably do as well, especially if you're online. You have Zoom or Adobe, Microsoft Word, or Excel. I have so many softwares on my computer, it's crazy. And so all of these are deductible, right? QuickBooks, Gusto, tax software, Zapier to automate stuff, Canva, right? ActiveCampaign, LinkedIn Sales Navigator, my texting platform, my calendar link, my task management software. All of this stuff is deductible for you, and you guys might have things like MindBody, what's the one? I can't think of it right now. It's all those training apps to like manage your clients' appointments and to get them to pay you, right? You guys all have those. Maybe other types of social media, later.com, HubSpot, all that stuff to kind of like manage your customers' experience and promote yourself online. That's all like software. It's all deductible. You're using it for business, right? If you have a fax number, which I have a fax number, but all that stuff is deductible. Okay, Kajabi, if you have Kajabi, ClickFunnels. I'm trying to think what else you guys would have. Um, DocuSign, Dropbox, um, yeah, like Slack. I don't know if you guys use Slack, but all of that stuff. Any software used to run your business more efficiently, provide a better experience to help you get more clients or reach out to people. Like I have a software that helps me with messaging on Facebook. That's a software and that's deductible. Okay, so like all of that stuff. Okay, um, that's computers and software. So if you guys have any questions on that, let me know. All right. Um, Contractors. So let's say you hire someone from Upwork to put some program document together, and you're like, hey, I want to promote my new training program or my new product or whatever. The contractors you hire to do something for you, those are deductible. Now, one thing I would mention with contractors is let's make sure that we are getting their W-9, right? W-9 is basically a little form that they fill out that has their name, their address, their social security number, or employer identification number if they're like an LLC or a corporation or something, right? Generally just an LLC. And so then before you pay them, you have them fill out the W-9. Okay, then you have that. So when the year is over, you can issue them that 1099 and not have to try to get the information from them, because I can promise you there will be at least one person who doesn't want to give you their information, and you know why. They don't want to report it to the IRS. Okay, so it's important that you get the W-9 or their information prior to paying them for services. Now, if they're through Upwork or Fiverr or one of those like contractor sites, they handle all of that for you because you're actually paying Upwork. So I misspoke, but if you're hiring someone to come on as a contractor and you're like hiring them from you to them, you're going to need to get that form. Okay. All right, do subscriptions, memberships. So this could be maybe you pay a membership to a BNI group or a part of a Chamber of Commerce like fee, or maybe you're part of a group where you like a trainers group or something where you guys network and you collaborate and you help one another. Okay, it could be like, you know, in your personal life you have an HOA fee, right, for your home. Okay, well, what fees like that where they continue to reoccur every month, right? Those could be dues and subscriptions. Maybe you have a particular business or fitness magazine that you subscribe to because it has certain content in there, like maybe certain training methods that you're learning from or something like that. Okay, or maybe it's like if you're in a certain type of nutrition space, maybe there's like the Whole30 magazine or like the vegan magazine, right? Or like some type of like entrepreneurial monthly letter subscription, newsletter type thing, right? So any of those subscriptions for business or learning, those can all be deductible. Okay. Now, what about education, professional development, certifications, licenses, continuing ed? All of this is deductible, assuming you are taking the course or you're learning for purposes of making more money, helping more clients, or providing a better experience, okay, or helping your business be more efficient, operate better. If you're a trainer and you're trying to get your license renewal, that's deductible. You have to be doing the continuing ed every single year. That's deductible. Okay, if that's what your business is about, personal training, and you're trying to get continuing ed so you can keep your license, so you can keep training people, that's legitimate business expense. Okay. All right. So what about equipment? So like small equipment. That's under usually $2,500. This is just expensed out. So let's say you bought you have a gym and you bought a squat rack, right? Those can be over $2,500. Let's say you spent $1,500 on it. You could write that off in the first year you buy it. Okay, and that's equipment. Okay, now if it's $5,000 squat rack, you still get to get the benefit. It's just treated a different way. So don't worry, like, don't think you can only buy small equipment. You can buy whatever you want for your business, essentially. It's just kind of treated a little bit differently for tax purposes, okay? All right, so gym or job supply. So depending on what type of business you have, if you have a gym and you're buying like little bands and weights and dumbbells, and they're like just here and there, like that's like gym supplies, right? If you are a chiropractor, you probably buy like certain things for your tables, right? Maybe you have to buy a new like head part because it broke off, or maybe you need to buy certain little pads for the thing that you put on your back to like stimulate the muscles or whatever. That type of stuff, that's all like supplies to do your job, right? So those are all deductible, okay? Okay, so insurance. Insurance could be health insurance, okay? Depending on your type of business structure, health insurance for the owner is sometimes treated differently. I'm not really going to get into the details of that, but you can pay health insurance from your business generally, okay? The other type of insurance is liability, cyber insurance, really any liability to protect you, or any insurance to protect you if something happens. Maybe a team member gets hurt, or a client is not happy and they want to sue you, or maybe something happens, like you're training them and something happens, they pull a muscle, right? So you have like that professional insurance. So if something happens, you're not totally screwed, right? Okay, internet. So internet at your office, 100% deductible. So like I have internet here. I actually don't pay for it. But if I did, 100% deductible, okay? Now the internet at your home, if you work remotely from home, you have a home office or a workspace, you can deduct internet. However, it's going to be a certain percent because you can't take 100% of your in-home internet, okay? And the reason why is because the chance of you using internet for personal use even 1 minute during the day is very likely, right? You're checking Facebook to see what your friends are up to, or Instagram, okay? Maybe you're checking Hulu or Netflix at night to watch your favorite show, right? Or maybe you are submitting, you're looking at new places to rent, like that's personal, right? Personal residence, okay? So if you're using internet at home, you don't get to take the whole thing, but you can take anything other than 100%. Okay, legal and professional. So if you pay a lawyer to write up your contract or your terms and conditions, or maybe you hire another professional, marketing professional, to run your Facebook ads, or maybe you hire a tax professional to help you ensure you're managing your taxes and your payroll and your accounting and all of that, right? It could be a bookkeeper. It could be an outsourced HR person. Okay, it could be really anything that's like a legal or professional service. That is deductible, okay, if you're doing it for your business. Okay, licenses and taxes. This is really business taxes. So like if you're in California, you have that franchise tax. You can pay that through the business, deduct it. If you have a business license that you have to pay $50 a year for, something like that, that is as well deductible. Now, if you have just saying like a salon, you have the little license saying, hey, I'm registered with the county or the state to provide this service. You have to renew it every year. You pay a fee. That's deductible, okay? Sales tax license, if you have to pay for that every single year, which you normally do, deductible as well, okay? Office expenses. So, let's say you have an office. Generally, let's say you have You have some people that work in your office and you provide certain drinks and snacks for the team. That can be an office expense. Another office expense could be printer paper, so you guys can print if you're printing, or it could be ink, it could be pens, or it could be little notepads, right, to take notes. It could be certain cables, like a charging cable or a power cable for your other monitor or your phone. Like it could be, I have this whiteboard over here, a glass board or whatever. It could be the little markers and the magnet things for the board. Like it could be this rug back here. Things like that, right? So like if you're buying it for your office, whether it's your specific workspace or your general area for you and your team, that can be deductible, okay? Maybe let's say you have a waiting room. You're a chiropractor. You have your waiting room, and you have a little coffee table and some chairs, and then you have some magazines, and you're like, I want to put a TV on the wall so my patients, while they're waiting, they can watch the latest episode of a soap opera, right? So you can have the TV installed. You can pay for the TV. That can all be deductible if it's for the benefit of your clients, your staff, things like that. Okay, so product costs. Let's say you sell a product. Maybe you sell a certain nutritional supplement, and you have to pay for either the raw materials, or you have to actually pay for it and then you resell it. Either way, the product costs that you pay for, those are deductible. Okay, so let's just say I buy a nootropic that I buy at wholesale and I resell it because that's part of my business model. The cost I spend to acquire that nootropic is deductible as a product cost, and then when I sell it, I'm going to basically have however much I sold it for minus how much I paid to purchase it, and that's my profit, right? So product costs, whether it's a fully ready to go product, or if it's you're buying all the materials and things like that, it's treated a little bit differently, but overall you will get deductions for that. So it's important to kind of track that stuff. Okay, rent. If you rent an office or a gym or a studio, whatever, whether that's like you have a year-long lease or you have where you rent just for the day, depending on your appointments. Maybe you are a therapist or massage therapist, or you do other things like that where it's like hands-on work, but you don't need like an office because you're not going there every single day. You're not booked up. You just need a spot here and there. Sometimes you do day rentals, $40 a day, right, for a session or whatever. Those are all deductible. Okay. If you rent like the gym, you probably have like a 1 to 3 to 5 year lease. The rent you pay is all deductible. Okay, telephone and cell phone. So if you have a cell phone, which if you're in this group, or if you're a human in general, you probably have a cell phone, and you can deduct your cell phone and cell phone bill. It's just what business percent out of 100 you get to deduct. It's going to depend on your situation, similar to internet in your home. Very similar to that. Okay, telephone, if you have, like I have a team of people, as you guys know, and they all have a Zoom phone, right? So the Zoom phones, those are all deductible because they're all so we can contact clients and operate a business and things like that. Okay, so if you guys have phones in your office or your gym, or even virtual phone numbers where it goes through to your phone, your actual cell phone, that's all deductible. Okay. All right, and then travel. Okay, so if you're traveling for business, maybe you're going to check out your new location that you're opening up, or you're meeting a prospective partner that you're going to start working with, or maybe you're going to travel to go to a event, whether you're hosting it or attending it. This is all deductible. So your flights, your hotel or Airbnb, if you rent a vehicle, or if you use Lyft and Uber, it's all deductible. Certain business meals can be deductible as well. So you just want to kind of keep track of all of that stuff, okay? And then also utilities. Utilities generally are 100% deductible if it's for the location you're renting, specifically for business, okay? Now, utilities in your home are a little bit different. That's part of the home office deduction, which we're not talking about today, but basically you get to take a percent of your home, the utilities, as long as you have a home office. If you don't have a home office in your home, whether it's a room like this or just a desk, like a workspace, then you don't get to take any utilities, right? Okay, so I'm pretty sure I went through every single thing I could think of. And I'm sure there's going to be more that come up, but if you guys have any questions on certain deductions, maybe you're like, hey, I have this event I'm going to, can I write that off? Or hey, I have this particular software for my business, can I deduct that? Just drop it in the comments. Happy to answer those. But generally, if you're buying something, spending money on something for your business, whether that's to generate more income, whether that's to help your clients have a better experience with your company, or it's really to help your team be more efficient or operate better, or just whatever reason, those are normally going to be deductible. Okay, so anything out of being reasonable and necessary to operate your business, it could be questionable, but if you have something like that, I suggest dropping it in the comments and I can give you my best suggestion. So, all right, so hopefully this was helpful, guys. If you have any questions, drop it down below, or feel free to reach out to us at client@moneymuscleco.com. That's our client-only inbox, so we will help you if you reach out to us there. And I hope to talk soon. Thank you, guys. Appreciate it.